Morning, everyone. Welcome to this morning's edition of MPC Markets Morning Call, 23rd of July, 2025. Stocks were mixed overnight, yet again, really. We've had a fair bit of that lately as the record runs very much slowing at the moment. We had the Dow basically up a small amount, the Nasdaq down 0.5%, and the S&P, see piggy in the middle there, up 0.06. Our market managed to eke out a small gain yesterday. Iron ore prices, general commodity prices heading higher. We saw a very distinct switch out of the big four banks into, all the other stocks in the market, basically. So we even had CSL up sort of 3.5%. About time, I say. Those banks were at ridiculous levels, particularly CBA, and there was extraordinary value coming in. The materials sector, particularly our healthcare sector, and other parts of the market overall. So Asia was broadly positive. We had some weakness in the European session overall. There's probably a little bit more uncertainty around those trade deals, not happening, essentially. The Philippines and Indonesia are the only two that they've announced deals on, apart from Britain, and provided details. Trump announced another trade deal this morning, didn't name the country, didn't name any details. So basically that probably didn't happen. The Russell was up overnight as well, which is the small caps index, up 0.8, as we saw some money flow out of the Mag 7 overall, particularly the chip stocks. Netflix took another dive. I think just overall those earnings and where the price is wasn't particularly positive. Philip Morris had earnings overnight down 8.5%, was fairly terrible overall. Couldn't happen to a nicer company. Nvidia down 2.5%, Broadcom down 3.3%. They've been in a bit of a heat of those stocks, I've got to say. And Micron only down 1.5%, and Qualcomm down about 0.62%. But overall, what we saw there was the Stargate AI project, which is the huge AI data center that Trump announced, is seeing some roadblocks and delays. And obviously that's a huge expenditure. It's anywhere near $500 billion. SoftBank's involved in that as well. But it's a joint venture between OpenAI and SoftBank. It's hit roadblocks, originally heralded as fairly transformative to supercharge AI in the US, but it's a huge, wide, accelerated build out of AI data centers. So the project's been scaled back to just one smaller facility now, dampening the prior optimism, and it just weighed on the sector overall. Yet again, just another announcement where Trump's gone for the headline and then not followed through overall. And we, as we sit here on the 23rd, we're only 8 days away from the hard deadline, and I say the hard deadline in inverted commas, on tariffs and doing trade deals. And here we stand at maybe 4 trade deals, if that. Yet we've probably announced at least 15, which no details have come out from. The Republicans have sent Congress home early for the break, not dealt with the Epstein files. There is a very much a bit of a revolt even from Trump's followers at the moment against the man himself. As the voter sentiment is generally around the fact that there's one set of rules for the ultra rich and there's another set of rules for the rest of us, was the quote unquote from a political analyst overnight on Bloomberg. So Jerome Powell spoke overnight, citing tariffs as the key reason. Expected to hold rates steady at the upcoming meeting, and basically there's a particular sensitivity to where tariffs are going to go. Businesses can't plan. He doesn't really want to move rates. But we've threatened huge hikes on pharmaceuticals, duties on copper, et cetera, which are all going to be inflationary. And that is the top job for the Federal Reserve. So, and I believe that was mainly out of the minutes. I think Powell's speaking tonight. In terms of earnings, RTX or Raytheon Corporation, military defence contractor, delivered strong quarter, 21 billion in rev, 9% increase year on year, beat top and bottom lines from analyst expectation. Gave a little bit of a not a dour, but a less than optimistic outlook overall. But although we saw Lockheed Martin get a $1 billion contract overnight, and Northrop Grumman, it rose about 9.5% overnight as it smashed its annual profit forecast, and then essentially said what RTX should have said is that they're betting on sustained demand for military and defence systems, which RTX will be very much involved in. So I think it'll be a bit of a blip in the road for RTX. It's one of our favourites there, although I would say that RTX was far more expensive than Northrop Grumman. So there's probably a little bit of catch-up going on there overall. Coca-Cola, surprisingly disappointing after Pepsi's really good results. That actually drove Pepsi stock higher overnight, 3%. But Coca-Cola was down 1%. Tariff-driven headwinds, slightly beat, but not enough. Not enough to lift the share price overall, down around about 1%. General Motors got hammered, down 8%. Auto Giant's second quarter profit declined significantly. Weaker performance in its crucial North American market, and they're very tariff affected as well. So again, Trump going and giving a big speech to all the Detroit auto workers, yet again been let down, fairly significantly. So now I would expect today with the ASX particularly, just to finish off the US markets, Google was not last night. It will be tonight with Tesla. So we'll get those results in the morning. Apologies, the calendar was done a week early. Sometimes they do move those earnings dates very late. So confirmed it's definitely in the morning tomorrow morning, along with Tesla as well. The analyst sentiment is the same as what mine is in terms of Tesla. It'll all be about the future, not necessarily the results. And there's been a lot of optimism on Google leading into the earnings. It's been one of the better performing of the Mag 7 over the course of the last week or so. Now we move on to commodities, and that'll be the story for the ASX today. Yet again, we saw a huge shift out of the big banks yesterday in Australia. And obviously iron ore continuing to rally, now up 7% for the week, up 1.4% yesterday, and did spike higher. It's at 5-month highs as it stands at the moment, which is critical for for our big miners, particularly the likes of Fortescue, BHP, and Rio. But for Rio as well and BHP, I think Rio's got a larger percentage in copper, but BHP is the bigger producer. But copper hit another fresh record high overnight, around about the $5.70, $5.80 mark at the moment, up 4% for the week. Now, that's on the US market. So just for context, there is the London Metals Exchange, which is priced in tonnes, which is trading very close to 10,000 a tonne. And then the US market is priced in pounds. The US market, the spread between the two, US has gone up and hit record highs. We're not at record highs in the London Metal Exchange, obviously because the tariffs would add to the US prices. And then obviously if it's too expensive for the US to be importing copper, which they actually don't need to do, it's just the refining they need to do, then they will import less for the rest of the world. So LME obviously would be a little bit cheaper because there'll be a bit of a glut overall. Gold was up 1%. It's only 0.2% from record highs again. Silver, yet again, making another 15-odd year high, with the highest level since October 2011, I believe. So around about 14-year high there, nearly at $40. We haven't seen a 4 on the front of that for a very long time, and it was only very brief. Copper we've already spoken about. Platinum took a little bit of a breather. Coal made a bit of a rebound, and which should help, obviously, BHP as well. given that it still has a lot of coal, attributing to its bottom line. And then the big story is lithium. So since Goldman Sachs called a massive downgrade of the lithium sector, literally that session, a Chinese mine was shut down, and then the demand's gone through the roof. Lithium stocks are up over 10% in the last sort of probably 7 or 8 trading sessions. We're seeing the likes of Pilbara Minerals and Liontown come back significantly. I would imagine Mineral Resources as well. But lithium is all the buzz on social media, Twitter, etc. And there's been quite a few long-suffering shareholders in the lithium sector. And when we're talking Liontown, I think was around about 60 cents or 50 cents, not that, probably just leading into the end of the financial year. And there was no signs of any life in the sector, considering China basically controls that sector. However, we've now seen, a significant bounce. I think Liontown finished around 96 yesterday, Pilbara above $2 in positive territory, but where Liontown made a 102 high the previous day. There are short positions in, particularly in the lithium sector. Liontown is the 6th most shorted at 12%. Mineral Resources at 14% is the 4th most shorted. Pilbara Minerals is the 3rd most shorted. And then you've got the uranium sector, which is number 1 and number 2, 16, it was nearly 17% and 14% overall. So, and Clarity Pharma, which is number 11, has had a significant run in the last few days as well. That share price has more than doubled in the last sort of month and a half as well. So not much joy for the shorters. Yet again, couldn't happen to a nicer bunch of people. I hope they get burnt. But there could be some significant squeezes, because when we're talking about 10% of the market being shorted, they've had to borrow that stock. They get margin called. These things are going to fly. So I would expect them. If you're relieved on the rally and you just want to get out, you're probably better off selling before the close, an hour or two before the close, because there is a tendency with these stocks that the shorters will hit the stock into the last sort of half an hour to bring the settlement price down, which enables them to be able to buy, get some more back the next day. It's fairly typical of these sorts of vultures, and yeah, but I would say that the fact that those particular uranium and lithium stocks are the most shorted in the market, I would say this run probably continues. Lithium stocks overnight globally were up about 8 or 9%. So we should see yet another good performance there today. So for the first time in probably 18 months, we've got real momentum, and we've got real focus on the mining sector, which we really needed. Despite the fact that the banking sector is coming back to a little bit of reality, I think this move is overall positive, because we saw CSL up 3.5% yesterday as well, around about the 265 mark. I think you can probably head back up to, in top third of the range, maybe to 285. None of the pharmaceutical companies have seen any major damage to their bottom lines on this tariff fear. Telix was another example that they met guidance overnight, nowhere near as bad as expected. So I would expect the money to continue to flow, and I think that will be overly positive for the Australian market. I think it'll really ensure that we outperform to the upside. Or at least hang in there a hell of a lot better in the event that the US starts to head lower. So again, tomorrow, Google and Tesla will be the main focus, IBM probably secondary, and nothing really significant in terms of economic numbers. And then it'll quieten down on the earnings front later in the week as well, with some manufacturing numbers. But I don't imagine we'll see much out of Trump because the Congress is now gone. So it will likely be a quiet end to the week, which could be really positive if these commodities continue to continue their momentum to the upside, even if it's just a grind higher in quiet markets. I think that will do quite well overall, because the focus will definitely be back on there. So I would expect these things from a technical standpoint, they're all showing significant momentum. Gold probably the only one that isn't, hasn't got a strong buy signal, but it's still got probably a buy signal. So we would expect for them to continue that run higher, which should be great leading into earnings, because it's the only thing with dividends. So we will. We're owners of most of these things. We'll happily be taking these into earnings, taking our dividend, and see what happens into the end of the week, into the end of the year, and see if that China can make a recovery as well. Because I don't think people have priced in a China recovery and the AI data center rapid expansion as a pair, and if those two thematics start competing over resources, I think you're going to see real assets head significantly higher. In terms of where the US stock market index is versus where commodities are, commodities are incredibly cheap in terms of real asset prices, and we've seen everything flow into those US tech stocks. So, real assets might make a little bit of a comeback for the first time pretty much since 2011 overall. And we could see some decent runs. So, which would be great for activity in the Australian market, and because we've got a bunch of those junior miners. But have a great day, everyone. And we will speak again tomorrow. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.